So welcome to the Bitcoin module. So finally we can start actually looking at Bitcoin as a coin itself, okay? We're not talking about its blockchain, how it's mined, nothing like that. We're literally just going to be looking at some details about Bitcoin in this module. So the contents then briefly, we're going to go for an overview of Bitcoin. Then through its value proposition, we've been through this before. Then the true coin supply, okay. Digital gold, again, we've been over some things before. However, we're going to touch on them again. The adoption phases of Bitcoin and where we currently are. The currencies units, okay, so that's a really interesting one. Answering, is it a bubble? Is Bitcoin a phase? Will it disappear? Then we're going to look at some derivatives of Bitcoin, okay, some alternate ways you can buy into Bitcoin without buying it directly. Bitcoin validation, again linked to these derivatives. Then going to be briefly looking at the S&P balance sheets and if some of these 500 companies were to invest a portion of their balance sheets into Bitcoin, what that would do to the price. Then Bitcoin ownership percentage. So we're going to look at a really detailed chart, table, I should say, and we're going to look at what it actually takes to be in the top few percent of Bitcoin owners. And then again, the Bitcoin top 1%, both in Bitcoin holders and globally. So then, the Bitcoin overview. Now, as we know, Bitcoin was the first cryptocurrency. Again, we've been over this before. It was Satoshi Nakamoto. Remember that name. They, he, she, whoever they are, came up with Bitcoin. And that was the first cryptocurrency. It's also the first real-world application of the blockchain. We've been over this. We know this. It started the value economy. Okay, because currency, as we've said before, is the purest form of value offering. An interesting one, the only finished crypto. Bitcoin has done its job. It is complete. It's finished. Yes, there are beneficial upgrades to be made to Bitcoin's code along the way that get accepted by the consensus model of the network. So if changes were to be made and accepted, it's obviously going to be for the better to improve Bitcoin and how it functions and operates. And it's the first or the number one cryptocurrency by market cap. Now, personally, I don't think this is going to change for a while. Ethereum has potential to overtake it. Even Cardano, I think maybe next cycle, so it's 2021 at the moment. During the next cycle, I think Cardano, if it performs well, could potentially rival Ethereum and Bitcoin, but we'll wait and see. So it's number one by market cap. So it's the store of value. It's almost the native currency of crypto at the moment. So then, Bitcoin's value proposition. We already know this. It's the number one feature of Bitcoin. Aside from its blockchain, it's the 21 million coin cap. Now, the graph on screen is really interesting. We can actually visualize what these coins look like and how they are actually being introduced into circulation. So we can see that early 2009 to 2012 on the top there. If we shoot all the way down to the bottom, we can see the number 50, and that is the block reward. Okay, so every block mined onto the Bitcoin blockchain was rewarded with, the miner, was rewarded with 50 newly minted Bitcoins. Now, as you can see, over the first kind of 10 years, from 2009, 11 years to 2020, we've got a very, very exponential growth in terms of the the introduction of new coins to the circulation. Now, as time goes on and as the halving events occur, we'll go over that in a later module. As the halving events occur every 4 years or every 210,000 blocks, you can see that on the very bottom of the graph there. 210,000 was the first halving event, 420,000 was the second. The block reward, so if we move along from the number 50 at the bottom there, we can see it goes down to 25 and then 12.5. Okay, we can see this block reward gets halved each time the cycle goes through a 4-year period or 210,000 blocks. Okay, now it's whichever comes sooner. So there's no fixed date every 4 years for this. Again, we'll go over that in a later module in the mining subject of Bitcoin. So we won't worry about that too much for now. But we can see as this reward gets less and less, we've started to see a decline or a decrease in the exponential growth, almost like a plateau in terms of how much Bitcoin is freshly minted to into the circulation. Okay, so over the next 10 years, we're going to see dramatically less freshly minted Bitcoins. Now, in terms of the actual coin supply in circulation of Bitcoin, you may be forgiven to think that there's 21 million coins which can be freely traded at any one moment. Now, unfortunately, okay, I have brought this up before, coins can be taken off the exchange and we can store them offline, which means they're no longer liquid to be traded on an exchange, for example. And so we have to learn about this true coin supply. Now, I've briefly kind of summarized this on screen. However, you can go into a lot more detail if you wish to in your own research. But at the moment, early 2021, there's around 18.6 million coins mined. Okay, Satoshi in his lockup, in his wallet somewhere, has around 1 million coins. Okay, it's never been touched since 2009, since he mined them off, he or she, or they mined them off the computer using the computing power. They've never touched them. They got to 1 million and then they stopped. There's around 4 million lost coins. Now, this is something really interesting to think about. In theory, okay, this will never happen, but in theory, we could lose every single Bitcoin if the situation occurred where everyone in the world, which again isn't going to happen, but if everyone in the world forgot the passwords to their wallets or lost their cold storage keys or something like that, Bitcoin, because there's never going to be more than 21 million coins, could disappear. Now, it's not going to happen, but it's just a little theory to kind of think about there. There are coins which are lost forever. People have thrown these things away by accident on their cold storage units, okay? Or they've forgotten their passwords, never been able to regain access to these accounts, these wallets. So they're gone forever. And then we are left with the remaining 13.6 million. Now, again, I've not gone into too much detail splitting this number up, but there are institutions, there are individuals, there are businesses which are hoarding large amounts of Bitcoin. Okay, there's only, I'd go as far to say, a couple million left on the actual Bitcoin or cryptocurrency exchanges. Okay, so we're only actually trading with a couple million Bitcoin at this moment. It's not the 18.6 million which you may think. And if you were to buy a Bitcoin and take it off the exchange, that coin is yours. You own that coin. It's like owning a block or bar of gold. If it's on your person, in your possession, no one can take it off you. Okay, so we have to think about this true coin supply, and as this supply gets squeezed, and what I mean by that is taken off the exchange, the price is inevitably going to go up. So the question again, is Bitcoin digital gold? Now, an interesting fact to know about Bitcoin, and I've explained it on the screen, the decreasing supply algorithm was chosen because it approximates the rate at which commodities like gold are mined. So there is a genuine link, maybe loosely, to the mining of actual gold and the mining of Bitcoin, okay, in terms of time. Users who use their computers to perform calculations to try and discover a block are therefore called miners. That's where the term comes from. They don't necessarily mine these things out of the code or out of anywhere in particular. It's essentially just a name given to them because of the loose link to actual gold being mined. Okay, so in that sense, yes, Bitcoin is similar to gold. Okay, and as well as an asset, you can own it, you can store it, you can, if it's on your person, no one else can have it. Okay, just like how Bitcoin can be taken off the exchanges. So then another really, really cool kind of, it's a cool metric to look at, the Bitcoin adoption phases. Currently, we are in the innovator section. Now, I'd go as far to say we're entering early adopters at this point, okay, during this 2021 cycle, bull run. I'd go as far as to say we're entering, if not already in, the early adopters phase of Bitcoin. And as we can see, what follows the early adopters are the early majority. Okay, so we're getting up there on that curve. Right at the top of that graph there, you can imagine are the late majority. Okay, going into the kind of the third quarter of that graph. And then the last quarter we can see are the laggards. So they'll be the final people. Okay, probably the elderly who will adopt Bitcoin. Almost not when it is too late necessarily. It'll never be too late to buy Bitcoin. But in terms of the actual adoption kind of growth rate of Bitcoin, if you're looking for some good returns on your money, and if you're not afraid to invest in Bitcoin, getting in now is probably, okay, this isn't financial advice, it's probably one of the more sensible options, rather than waiting to join a early majority or late majority. Okay, if you know about it already, if you're taking this course, taking the time to learn about it, the chances are you're going to want to put some money in reasonably soon. So then, another really useful and interesting lesson about Bitcoin is the currency units. Okay, because Bitcoin is a deflationary currency, we go 8 decimals deep into Bitcoin. Okay, so obviously one whole Bitcoin is one whole Bitcoin. Then we go into 10% of a Bitcoin. If you own 0.1 Bitcoin, it's still 0.1 Bitcoin. Then we get into bit cent, so 0.01 bit cent. Okay. Then we go into millibits, which is the red, bits, which is the green, and finally a familiar name. We've got satoshis at the end. Now, you could say, if you've got 0.1 Bitcoin, you've got 10 million satoshis. Okay, satoshis is kind of the more adopted currency unit for Bitcoin. So then another great question, is Bitcoin a bubble? Well, following the statements on the screen, one of the largest organizations in the world by market capitalization. Okay, so in terms of is it a bubble? Well, if it is, it's an incredibly large one, which a lot of people actually believe in and support. Okay, just by the market cap of Bitcoin being currently, again, early 2021, it's currently around £750 billion. Okay, it's around $1 trillion. So it's one of the largest organizations in the world. Now, if it were to be a bubble, it would be a very impressive one at that. It's only a bubble if it's built on fake fundamentals. Now, again, I've got some listed on the screen of the fundamentals of Bitcoin. The actual blockchain technology itself is a fundamental of Bitcoin. Okay, it's technology. It actually works. It has a purpose, and its potential usage across industries hasn't even been scratched yet. So, top of mind awareness as well for a currency. It's probably one of the most known currencies in the world because it is going for that global adoption. Okay, it's like it's not the same as the US dollar. However, it wants to be a global currency. Okay, like I said in one of the first kind of lessons of the course, it's going for a global language. There are different languages in the world. There are different currencies. Bitcoin wants to be one. It wants to be the only currency. It wants to be the only language, if we're comparing it like that. Validation from the world's biggest companies. Okay, so Tesla, for example. Tesla has Bitcoin on its balance sheets. Now, you may say this is a calculated risk from Elon Musk, but I believe it's the first step in the FOMO stages, okay, where everyone else is going to finally realize, oh, we need to actually buy some Bitcoin because, some of the most wealthy individuals in the world have taken that first step, okay, and everyone else is going to follow. And again, Bitcoin is the largest bank in the world. There is no other bank bigger than Bitcoin. So as a store of value, it's definitely made an impact. Okay, so these are all positive indicators. I myself would go as far as to say it's definitely not a bubble. So then, derivatives of Bitcoin. Now, if you want to indirectly buy into Bitcoin, okay, if you are into more of your stocks and you don't necessarily want to get into cryptocurrency directly on a crypto exchange, you could purchase some stocks of the following companies. Okay, apart from Ethereum at the bottom, that is a crypto. However, you could buy MicroStrategy, which is owned by Michael Saylor. Again, his company is 100% invested in Bitcoin. Okay, Grayscale BTC Trust, they own one of the largest stockpiles of Bitcoin in the world. PayPal, they've got Bitcoin on their balance sheets. Square, Tesla, all of these companies' stock price is now very loosely linked to the performance of Bitcoin. Bitcoin skyrockets. You could probably assume that the price of these stocks will increase somewhat as well. And following on from that, we can see this validation by these companies buying into Bitcoin as a hedge against inflation or as a way to make more profits or protect shareholders, for example. We can see the validation in Bitcoin purely from these companies. Okay, they're investing. We can see on the screen, MicroStrategy has almost 100,000 Bitcoin. Grayscale Trust has an incredible amount of Bitcoin. 654,000 Bitcoin. Okay, with a market value of 42 billion at the time of recording this, early 2021. Square Payments, 8,000 Bitcoin. Tesla, almost 50,000 Bitcoin. Now, if you've tried to buy Bitcoin already, you know how hard it is. Obviously, everyone's financial situation is different, but you know how hard it is to accumulate 0.1 Bitcoin, 0.2 Bitcoin. Okay, it costs a lot of money. And these companies have thousands of them. So the price of Bitcoin can very positively or even negatively affect these companies' performance. Now, again, this isn't kind of anything to do with Bitcoin necessarily, however, more so something just interesting to look at. If the S&P 500 companies were to invest 0.10%, 1% or 10% of their balance sheets into Bitcoin, what would we assume the price of Bitcoin to be? So let's say 0.1%, it's not quite clear on the screen, is around $5,000. 1%, 50,000. 10%, upwards of £400,000 per coin. Now that is a 10x from the current price, which is incredible. Okay, just with 10% of the balance sheets of 500 companies. It's really not a lot of companies to have such a huge impact on the price. So we can just imagine what global adoption would do to Bitcoin's price. Now, here's a really, really interesting table to look at in terms of Bitcoin ownership in percentages. Okay, so briefly on the left, we've got the amount of Bitcoin. On the right, we've got the average dollar value per address. Then we can see just to the left of that, the average Bitcoin in that address category, the cumulative address percentages. And so what we can see, and then we've got coins as well, which is how many coins are within that category. And then moving left again, we've got the amount of addresses in that category. So if we look at the highlighted red zone on screen, again, this source was Invest Answers. So if we can see the red box, to be in the top 0.5% in 2021, early 2021, you need around 7.5 Bitcoin in your address, in your wallet. That has a market value of around $420,000. So again, it's an incredible amount of money. However, you'd be in the top 0.5%. Now, if you move up to the red dot, which you can see on the first section of the data, we can see to be within the top 4% or 5% of Bitcoin owners. Okay, so anyone with Bitcoin comes into this equation. You need around 0.23 Bitcoin, around 23% of one Bitcoin. Okay, and that's going to cost you around an average of $13,300. Again, so it's not unachievable to have this amount. However, it will put you in the top 5% of all Bitcoin owners. Okay, now we can see to be within the top 50%, you just need $11 or $12 worth of Bitcoin. Okay, so it's really not that much to even start creeping up the table. Okay, $200 puts you in the top 25% of all Bitcoin owners. Okay, so we really should be trying to push for one whole Bitcoin. In my opinion, I think we should be pushing for that, because there's only, I think mathematically, I read somewhere that there's only going to be 400,000 people in the world who will ever be able to accumulate one whole Bitcoin. Okay, before it's too late and everyone has a share of Bitcoin, and before the price gets ridiculous. Okay, so 400,000 people to get one. That would put you in turn in the top 2% of all Bitcoin owners. Okay, so some really interesting stuff. If you want to pause on this slide and just take this data in, take this information in, by all means do so. So moving on. Again, to be in the top 1% of all Bitcoin owners, so we're talking about 1% now, you need 3.3325 Bitcoin. Okay, which will cost you around, let's find it, $186,000. Okay, or in terms of the population of the world, you'd need around 0.0293 Bitcoin. Okay, so not a lot of Bitcoin to become top 1% of global people, okay, of the global population. However, considerably more investment needed to become a 1% Bitcoin owner. So that is it. That is the Bitcoin module completed within the course. Okay, moving on, we're going to be looking at how Bitcoin is stored in wallets. We're going to be looking more in detail about the blockchain of Bitcoin in particular and how it's mined. And so that is the Bitcoin module complete, and I will see you in the next module.